Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Welcome, everyone, to the Blockchain Show. It's a great honor to welcome two guests today, Pelli Wang and Wasyl. Welcome to both of you. Thank you for joining me today.
Thanks for having us.
My pleasure. I know that we're going to be talking about a lot of topics that I'm curious about, specifically the broader landscape of decentralized finance and your work at Bracket Labs. But if you wouldn't mind, both of you briefly, maybe just introducing yourself a little bit, since it's your first time on the show, I'd appreciate it.
Hi, everyone. Pelli here. I've been working in crypto since 2017. I got into crypto really from traditional finance. I originally worked in banking and private equity and was really interested in sort of the direction of using technology in finance. So I moved over to the fintech world, started my first startup called Seed Invest. It was one of the first crowdfunding platforms in the US, grew to be eventually acquired by Circle. And then from Circle, I moved over to Consensus, really to sort of build the ecosystem. And that's how Mike and I started working together. We did a lot of different projects, on the incubation side, on the investment side. We also had a token launch platform called Token Foundry. And from there, we left to start Deer Creek, which was an advisory firm. And out of Deer Creek, we founded Bracket Labs. So we started that about a year and a half ago.
Very good.
My background's more just traditional financial analytics. So I started at Bloomberg out of college and was working on some pretty interesting stuff with trade reconstruction and compliance. And it was mostly for fixed income trading, which happened a lot on the Bloomberg terminal. If you're familiar with Instant Bloomberg, there's like a chat system on there. And so I was one of the area experts on that system. And so it was a weird place to be as a young guy in there, because there was a lot of responsibility and understanding who saw what, how data is transferred. You're dealing with general counsels from other companies, large banks. And as part of that process, I had to learn kind of at a pretty high level about not like in the weeds, but just as like a bird's eye level about encryption, because we had to deal with some things, some projects in regards to that, file transfers, et cetera. And it was really exciting because in researching that topic, I discovered Ethereum through a friend, and I was like, this is incredible. I was so embittered by what was happening at these large financial institutions. I saw it all. Unfortunately, I was able to see a lot of, I had to, right? Because I had to process the data and I was under tons of NDAs, can't talk about stuff, but I saw a lot of crazy stuff. And I was like, this is not right. We need more transparency in all products. And Ethereum was like this global settlement computer idea. And it was so intriguing. I just spent the next couple of years just trying to figure that out. And then it inevitably landed me at Consensus with Pelli. And then we worked on all these really cool projects until we started our own shop. And then now kind of going the product direction with Bracket Labs to fill some gaps that we see. So that's more or less where we are today.
Yeah, very good. Very interesting backgrounds. Impressive, actually. And going forward, I was wondering if you could provide an overview of Bracket Labs, your mission to level the playing field in decentralized finance, and maybe furthermore, what inspired you to create Bracket Labs and embark on the journey in the first place, if you want to expand on that.
Yeah, absolutely. So always an ambition to productize stuff, get involved in actually building something. I think fundamentally beneath it, just for me personally, Web3 crypto and is the ownership economy. And to me, it's this way that we can help our kids, right? Leave something to our kids. It all seems very silly right now and speculative, but ultimately having an ownership economy based on a public network infrastructure that's sufficiently decentralized is a better model than what we have today. And eventually everything will catch up to it. But we met Jason, our CTO, our brilliant PhD and developer, and he kind of was working with us on ideas to help fill some gaps. And one of the areas we saw that crypto is inherently lacking is like volatility tools. And you could use volatility tools for a lot of stuff, right? I mean, in traditional finance, it's used for hedging because there's large institutions with lots of money and they use options and things of that nature for hedging. However, crypto is a speculative world right now, which is fine, right? It's an early Wild West type thing that's slowly getting mature and slowly getting acceptance worldwide. But in order to harness some of that speculative nature, volatility tools are actually a pretty cool way to do it. Again, it's not necessarily using to hedge, but to actually capture some of the speculative interest. And so we said there's a massive gap here. No one's really figured out how to make volatility tools attractive to the average crypto trader, degen, or anybody who wants to speculate or enhance their trading experience. Traditional options, derivatives that were really complex are really more for a sophisticated audience, and the liquidity depth is just not there. Nor is the pricing model really working for Web3 because you have to constantly update prices in a traditional options model, and that's not coherent, or it's not doesn't really work well with the speed at which blockchains operate, even on layer 2. So, the fastest blockchains can't be instant, like almost instant, like dedicated hardware lines. So we said let's build something that goes after volatility, which is this moonshot. I mean, let's be honest, it's really not a huge market for volatility today, but it's a $600+ billion dollar market a year in traditional world. So it's like this massive asymmetric upside. It's actually a cool place to be in and try to come up with something that works. That's what landed us at Bracket Labs. We're like, let's build a pricing model. And Jason kind of came up with this amazing adaptive pricing model on chain so that we could make volatility products that worked on chain, not off chain with some on chain stuff, fully on chain. And that takes away the need to constantly update pricing. That's how our model works. It's percentage-based pricing, which allows us to create ranges of price that allow you to speculate, stay in, break out, all different kinds of products we can create with this. Contract durations could be short. We're working on a perpetual model for the future. So a really cool way to harness volatility, make it a little more fun for the average user, and ease people into this on-chain volatility model. And that's where Bracket is today. We have our new product Passage that is going to be doing that, stay in or break out of a range with a little leverage, volatility model, fully on-chain order book. So that's how we came up with what we have today, and why we think it's an important place to be in DeFi.
Yeah, that's pretty awesome, because most people, older generation, when I would tell them about DeFi, the sticking point was the volatility. So I kind of like how you're harnessing that. That's interesting.
It's such an important component. If you look at it from, let's look at the S&P 5 versus crypto, it's way, way more volatile, right? But there are some nuances in our own industry that there aren't a lot of tools to trade it. You have a lot of opaque vaults and things. So we needed to come up with something that was fun, exciting, a little bit of speculation, because all crypto people at their heart, I think, are a little degen and want to have fun trading too. But the long tail of this is this immense potential for maturity in a inherently speculative or inherently a volatile asset class that needs more tools, and eventually will attract more sophisticated players on chain too.
Yeah. And coming from the product side, we've been working in crypto since the very early days, right? And we saw a lot of the original products launch on ETH. And, obviously the ecosystem has grown to other L1s, L2s, but a lot of the products that we're launching on some of these newer chains were just taking what happened on ETH, right? Like a DEX or perp, and then just basically forking it and adding a new token and launching, with a new front end. And so we said, well, that's fine, but it's not new. It's not rethinking, a critical piece of what I call the DeFi tool set, and we don't really have anything great for volatility. And so, that took a lot of development for us to get to where we are today with Passage. We've launched, other more, kind of like beta products, and we've done a lot of, testing to get to this range and trying to really simplify the user experience so that it's, a really complex concept, but we're trying to make it easy and more fun for users to use on chain.
That's excellent. Yeah, I wanted to talk about Bracket X, the DeFi derivatives primitive.
Yeah.
I know it's designed to allow investors to take leverage positions on blue chip assets, but I was wondering if you could explain the mechanics of how Bracket X works, and maybe specifically for those who are not yet familiar with DeFi derivatives.
Yeah. So I'll explain it like someone who's not familiar with derivatives or DeFi. and then I'll explain it for someone who might be more familiar. So at the very, like golden retriever level, and then we'll go up to like a little bit higher level. For the average person that knows anything about crypto at all, or just sees crypto, Bitcoin, that maybe is experimenting for the first time with self-custody and, maybe getting into DeFi for the first time, they know how volatile these assets are. But they don't necessarily know which way it's going to go. Right up, it's going to go down. Like, you might have an idea based on macro events, and if we've been in the industry a while, the cycles, the Bitcoin rainbow chart, the halvening, all this stuff. But the average person doesn't necessarily, or the average trader might not even know. Even over a short enough timeline, no one knows. But over a reasonable timeline, you could make some appropriate trades. So there are a couple tools out there you can use to do this. Right, you can buy spot, you can buy Bitcoin, or you can ETH, and like, okay, I'm going to hold this, and it's going to go a certain direction, hopefully up, right, from holding it. I could use a centralized exchange and do some of that spot trading. Maybe if you're a little bit more sophisticated, you can try the margin trading, with some shorting or something. But the most recent advancement in DeFi or even centralized finance, centralized crypto trading has been perpetuals. People love this idea of ramping up the the leverage and going long or short. Now, for those who are not familiar with crypto, perpetuals are a way to basically keep an open position, long or short, with a lot of leverage. That's the TLDR on perps, without getting into too many details. They're futures, but with no expirations. You basically pay to keep a position open if you want. If it's not moving your direction, for instance, it's going against you, you can pay to keep it open. There's no like, it expires in a day or a week or whatever the contract duration typically is. So that's a really fun tool that has moved on chain because it's a popular primitive that was in with Arthur Hayes over at BitMEX, and he took some ideas from some 1990s Nobel winners, I think, in this particular space in financial engineering, on the idea of a perpetual future. So it was a kind of a borrowed idea from academia and morphed into a product that took several years to get any traction. Right, it was launched in 2017 or so, and it took several years before GMX launched and had their success. And what we're doing is basically offering a product that says if you don't know the direction, but you think things are going to get crazy, you can now take a position on it without having to understand anything really about like options math, Greeks, things that are typically used in derivatives trading to hedge or to go long or to make a prediction on where an asset's going, long or short. And so that is not something the average trader knows how to do well. And so we wanted to create the kind of equivalent to what Arthur Hayes did to perps by taking an idea out of academia. In a way, we kind of formulated it ourselves, but there have been experiments in the 90s with these types of products where there's a range, and the amount of time you spend in that range, the more money you make, for instance, or it settles right away if you break out of that range. So it's really just a trade on volatility. Is it going to be volatile, or is it not going to be volatile? And that's a perfect partner to, is it going to go up or is it going to go down? And the market doesn't have that choice today because it's just too complex and too difficult. And so we wanted to develop that product. And you could imagine there's tons of use cases for that primitive, right? The fully on-chain order book, range-bound trading based on in time-based returns, based on that kind of volatility level. And the average trader doesn't need to do anything. They don't need to monitor it at all. It just settles automatically the first time it breaks out of that range. And so it gives folks this ability to say, there's an event coming, or I think in the next couple of days, there's something happening. And I don't want to buy this long-dated expiry for an option. It's like a month from now or whatever. I can do that. I want a 2-day, I want something that I can do quickly. Or eventually we're going to have something that's perpetual. I want something that I can keep open. So we wanted to go that direction, but with volatility. And I think that's something that is going to take a little time to get adoption, but ultimately is a completely necessary tool in a highly volatile space on chain where you have transparency and control of your assets, which is a huge advantage for DeFi specifically, as opposed to trusting some opaque exchange in the middle of who knows where that you can't, you don't know where your assets are sitting. So that's the primitive that we built.
That is excellent. And I kind of wanted to zoom way out for a minute, because when you were speaking about product, I was imagining just how difficult your job might be when you're looking at people as a whole I like what you said earlier about being able to hand something off to your kids, because I'm still relatively young, but in my 30s, I've got children, and I'm thinking, well, yeah, I would love to do that. But I think about people in their 20s, they're more likely to embrace the technology, but it seems like at least people I know, they're not really into, I'll use the word investing. And then people who are thinking about investing, they might not necessarily want to or are able to embrace the technology. So I was wondering if you could share the challenges of how you bring people in to the product.
It's something that we look at, every day, just in terms of the size of DeFi. We're very, very excited and bullish on, the prospect of DeFi being the future. But if you look at the actual data points, the number of wallet activity is still relatively low, right? In the whole sort of grand scheme of crypto, there's maybe 2-3 million active wallets on a daily or monthly basis, whereas if you look at the total amount of people that are on crypto exchanges, that's in the hundreds of millions of dollars. Hundreds of millions of accounts. And then if you look at the people that are just that have brokerage accounts or like have bank accounts in the world, then that's in the billions, right? So it's still a small percentage of people that use crypto, and then from that pie, that's even a much smaller piece that uses DeFi. And so some of that is with kind of like not feeling comfortable with wallets, like not understanding, oh, I have to have this private key and I need to keep it secure. So I think that's some of the challenges that a lot of the wallet providers, MetaMask, for instance, was one of the first browser extensions, and I'm seeing a lot more security features built into it. So making sure that you're not getting phished, or like, is this suspicious app that you're trying to connect to? Is this something that you really want to connect to? So we're starting to see account abstraction security come into the wallets, which should make it more secure and have people want to sort of transact out of their wallet versus out of their exchange. And then two, I think on the app side, there's just a lot more interesting, apps coming to market. And so hopefully that will draw people in to say, hey, I can't get these products on my exchange. Therefore, I want to move into a wallet, and then, from the wallet, connect to the app. And so hopefully that conversion, speeds up. But that's something that we are concerned about, is how do we grow the number of DeFi users fast enough to support, all the new apps coming to market.
Yeah. I mean, even me in the beginning, I was highly suspicious of most DeFi at the time, early days, like consensus days, just because I didn't see this yield farming. It was funny, like it was really funny. The early days of DeFi were just kind of fun and interesting, but they didn't really have much of a use case. Very, very speculative. The yields were, I don't know, who knows where they were coming from besides fake token emissions. And so I was not happy about that in the early days of DeFi. But as we waited a couple years and advised companies, and then we saw more examples, more regulatory clarity in the world, more acceptance by users. We said this, okay, there could be real products here. They might have to start off a little speculative, but there are real chances of building these on-chain tools. So I'm just like Pelli. I'm very much aware that the pond that we're in is super teeny tiny as compared to the rest of the world. But in order to maximize the advantages of having control over your own finances, trustlessness is a concept that people learn the hard way, right? I gave money to FTX. FTX lost my money. Totally ridiculous, right? It would, ostensibly, this is an absolute travesty for our industry, for trust. But DeFi, yes, there are hacks, right? This is still early days, but most of the time, users can retain custody of their assets. They have control over their assets. They can withdraw from a smart contract. The owners of the smart contract typically don't have access to pull money out of it in that sense. So there's a lot of advantages, but the average person is looking just for ultimate convenience. And our hope is, like Pelli said, is that just there's more and more users who are funneling out of the top of that custodial experience down into in the app experiences. And the way that that's transpiring today is the largest custodial exchanges, Binance, BitGet, all these guys, right? These huge Bybit, you name it. There's a bunch of them. They were all starting to experiment with kind of this verticalization of their stack, saying, so not only are we doing custodial stuff, we're now stacking on top of that non-custodial stuff, and then we're going horizontal there too, and saying, well, we're offering all these different products. And so it gives users the ability to say, I don't want to just do on-chain or off-chain, custodial trading. I want to try some DeFi stuff. So I can do that right through my existing exchange, and I can go try some things. And I think that's just, this new world is going to be this hybrid world between centralized and decentralized products, where the decentralized products provide a source of revenue and yield and upside for the exchange in their partnership, but also it gives the users a fun way to experiment with on-chain tools that are pretty difficult to create in a centralized fashion with that level of trustlessness. So it's going to be a long road, but if you're a really good product and you have the right incentive structure, we have high hopes for DeFi to survive and thrive once things improve globally for sandboxes and rule sets. We're seeing that already. UK, places like that are really forward looking and saying, we don't want to crush this. We don't want to kill this industry. There's a lot of innovation happening here. And so we would hope that would continue.
Yeah, that's excellent. I mean, it's certainly a rapidly evolving space with tremendous opportunities and challenges. And it's interesting when we were talking kind of like about the current state of DeFi and just how certain events through the news and how it's been received, the public opinion, and it's really unfortunate because I think a lot of people are just kind of missing the underlying potential. But I kind of wanted to talk a little bit about regulatory issues, because being in California, all of a sudden I was no longer able to stake certain cryptocurrencies on a popular exchange. And, I did not have much in there at all. It was more like years ago I was just testing out the technology. I was, let's leave this here, see what happens kind of thing. And lo and behold, we can't do it anymore here. There's laws being enacted. And, I got the emails. There's, hey, help us, but I'm thinking, what can I do as a person? I could talk about it on the podcast maybe, but it just brought to my mind, there's powerful people who are making laws that's going to change what we can do. So I don't know if you could speak to anything locally, nationally, globally that you guys have been dealing with in terms of regulatory issues, or just really anything you'd like to share. I'd be interested to hear.
I mean, on an industry level, we'll start there. The industry has always been kind of a bastard child of the financial system, right? It's like, it's this thing, it's crazy, but we're not going to pay that much attention to it. And then when it started getting bigger, and now it's like, $1 trillion market or what have you, all of a sudden it's no longer a joke to the financial regulators, the Congress. They're all looking at it like, okay, because it mostly had to do with the acceptance of stable coins. Personally, if it wasn't for stable coins, I don't think it would be that big of an issue because the market would be a lot smaller. But with stable coins, it provides this amazing utility. Everyone says, crypto has no utility. There's no use case. Well, we're moving billions of dollars almost instantly across borders. I say we, I mean the industry is, over these exchanges or direct. And it's like this amazing FX use case, right? I can swap dollars for euro dollars on chain. So this use case is tremendous, value transfer. I mean, that's in and of itself the killer crypto use case today for just on-chain activities. And so with the emergence of that, you saw a lot more concern coming from the Fed, coming from the Treasury, saying, we need to look at this. This is really important. We don't want it to. I remember when Facebook tried to do their thing, tried to do their stablecoin, and all the countries that they were going to try to launch it in, the basket of currencies were like, wait. We can't have this, right? We can't have a technology company create a new potential dollar for the internet or whatever. So it's the holy grail of use cases. Money is how the world goes around. So the largest hegemony in the world, the United States, of course, is very concerned about this. What is actually true, though, is that stablecoins, US dollar stablecoins specifically, have increased the demand for dollars and will continue to increase demand for dollars and the distribution of said dollars to more people that want it. The demand, no matter what happens, and you see, right now we're having inflation, all this stuff. No matter what happens, there's the demand for dollars in today's age is still really, really high across the world. People want dollars still. So that is good for stablecoins. But unfortunately, we've seen even of, like, I think it was today, the SEC went after PayPal or there's rumors of that, I guess, for their stablecoin. So there's a lot of antagonism and regulatory, we could call it overreach, that is challenging the idea that money can live in any way outside of the current existing system, even though it's being done legally today, right, with the stablecoin custody and all that. So on a industry scale, some places like the West are very skeptical of that because central banks don't want to lose control of anything on the money side and the exchange side and the rails. But as far as like technology is concerned, there are other countries in this world, other places that are leading the charge about saying, we will sandbox this, we will make rules, we will make like VASP, we will do that, it's not really quite there yet to the point where all DeFi products are going to adopt that standard because it's difficult, expensive, takes time. But there are places now in the world that are taking the charge and saying, we don't want to like crush DeFi. We don't want to attack them. And they're so small. Like they're not, like it's such a tiny, tiny blip. We don't want to crush this innovation because if it gets successful, this could be amazing for our economy, right? And that's where you're seeing the UK, Singapore, a lot of places in the world running with this, saying this is cool. We're going to create rules. They're reasonable, hopefully, and we're going to go that direction. Now, it's not mature enough to where all the DeFi ecosystem is going to adopt those rules, but eventually it'll get to a point where the projects, it'll be ubiquitous. People will end up, going through the licensing regimes and getting there. And we think that, might take a few years, but it'll eventually get there. But that's encouraging for the global ecosystem, maybe not for the West, but for the global ecosystem.
I think, on the regulatory side, there is quite a lot of crackdown on the exchanges, right? And the exchanges, are really where a lot of money is basically switching from, fiat into crypto. And I think, that's where a lot of problems, if you look at like 2022, that's what happened with FTX. A lot of the centralized lending and borrowing outfits like Voyager, Celsius, BlockFi, and how they do some of those business practices. They're obviously they're not all lumped together, but they all had kind of the same result, which is they had liquidity problems. They all filed for bankruptcy, and that's not a good experience for people that had their money there, right? So I think in general, people within crypto are welcoming to thoughtful legislation that makes sense, right? We do not want another exchange to blow up. That's not a good look for the industry. So having more regulation come, to fruition is a good thing. And I think a lot of projects will want to comply, but not, if they're just taking laws from 100 years ago and saying this is, what the SEC thinks and whatnot. So I do think that, protecting retail investors from not getting totally fleeced, we don't want that. We don't want what happened in 2017 with like BitConnect and Ponzi's and those kinds of scams. Crypto does not want that to really be a legitimate, financial service for the next 50, 100 years. We want good products. We want good firms. And we don't want scams.
Yeah. And it's just a shame that the current regimes are, unfortunately pressuring companies, and a lot of those have moved offshore. A lot of those have changed domiciles because of it. I understand from a regulator's perspective, they have to be super careful because it's their reputation. Like they missed FTX, they missed Celsius, they missed all these huge red flags. And whatever you believe about it, whether it's a conspiracy, they had bribed them, whatever actually really happened, I don't know. But it looks terrible, right? So it's kind of an overreaction from a lot of that to say, okay, now we're going to go after everything. But it's like to Pelli's point, it's the big exchanges that are under fire today because they are the ones that handle money in a way that's a little different than how a traditional financial institution is handling money. And you could say, well, they're licensed. Well, FTX was licensed. They had the most licenses at the time. So yes, there is a legitimate concern that we want to make sure these people are good actors. And I think certain jurisdictions are actually making those moves. Like Dubai, for instance, has been a great location for crypto because they have the light, especially for the centralized exchanges, because they hold a lot of money. They have to be audited. So they have the rules with the VARA license to make that a thing.
And they're really set up more or less for those types of companies than DeFi companies. But that is ultimately a good thing, right? We want to see that happen. But crypto does rely on retail users, and it will eventually rely on institutional interest. And it can't be a laughing stock for the world to constantly have these fraudulent people or bad projects come in and ruin it for everybody. So we have to have something. But I just hope that in that process we don't throw the baby out with the bathwater and push innovation away that would otherwise be very beneficial. And that's what we are seeing happening. And I don't like it, or I don't like that. And I'm sure being in California, it's disappointing for you as well, because you're like, man, I feel like I'm shut out. And most U.S. users, I feel like they're shut out from, because projects can't service the U.S. So it's like the U.S. market's going to be shut out from innovation in many ways. And we'll see how long that lasts. Hopefully, it doesn't last forever. But that is the state of the market for crypto. I mean, I would personally like to see this happen quickly, but we all know that until everyone's aligned on what the outcome should be, we're probably going to see more of the same until the next administration in the West. But innovation doesn't wait for America sometimes. We've usually been on the forefront of it, but it might not wait for us this time.
Yeah, some really good points by both of you. And you're right, it is bizarre to be on this side of things right now. But yeah, I'm confident it will work out eventually.
Yeah, me too. Yeah.
And you're right, it's often the exchanges. When I think about all the most awful things that have happened,
it's usually the exchanges.
Yeah.
Yeah, the big ones.
But just to put people at ease here, because we're talking about a whole different ballgame with DeFi. In terms of security and trust, maybe you could just briefly go over how Bracket Labs is different, how it addresses these concerns and ensures safety of users, assets, transactions, that sort of thing.
Yeah, I mean, being on-chain, you possibly could. That's what we do. On-chain order management is like, and getting data. It's all on-chain. That is not easy, right? And it's not always the most efficient way to do things, but it is much more transparent. And when you have all the on-chain actions, you can see what's going on. Everyone claims DeFi is some nefarious, thing. It's really not. Everything is boldly on-chain, right? All accounting can be had. All transparency to the transactions are there for anyone to check. So we take security really seriously. We use Halborn as a partner of ours for security. We use top-of-the-line infrastructure from Alchemy and Chainlink Labs, who's like an incredible partner of ours for Oracle feeds. They're the most secured Oracle feeds, we think, at the moment. For pricing, we have Gnosis Safe that we handle. So everything is in a way that no one single individual can ever corrupt the protocol, and that's how most DeFi platforms are actually building today. They're using those kind of industry standards to create safety. But the difficulty is the more complex you build a smart contract. And this is not really for us, but I guess it could be for anybody. But we've seen a lot, for instance, in bridges. That's a great example here, I think, in the DeFi realm. Is the more complex your smart contracts are, the more vector for attack you have. And so it's just security 101. So when you have some super complicated mint and burn thing, and there's an attack, and there's potentially billions of dollars on the line, which we've seen in the past, that's a horrible situation. And it doesn't look good for DeFi when you have a massive security violation, a security vulnerability, and you see funds getting drained. That's horrible, right? That's why DeFi has taken a lot longer to get anywhere. It's because there are some difficult user experience things that are scary for an average user who says, I believe that this platform is trustworthy, is trustless enough, I guess you could say, to where I can put my funds in the smart contract. It's been audited. I know it's going to behave the way that it's supposed to behave. And I think one thing that the DeFi realm would welcome is an industry standard approach to security auditing. Like, we use the best that we can, right? We think Halborn's the best right now in security auditing, and you have to work with the right people, and we think we do. But, until there's an industry requirement for something like that, that's either self-enforced, which is kind of the way it is today. It's like somewhat self-enforced, or it's regulatory enforced, through regulation. That would, I think, ease a lot of people's concerns about security. But we do the best we possibly can. We use the industry standard and best practices for all of that. And the average user of our platform has used other DeFi platforms, so they're somewhat more familiar with how DeFi and self-custody works. But in order for our industry, like we talked about earlier, to get ahead and to move the needle and see more users enter our pond and grow that pond, we need to have these kind of industry enforced, like self-regulatory things where it's like you have to be audited. You have to have these consistent security measures. You have to do multi-sig that's over a certain amount, so you know that not one individual could corrupt anything. So all these things are very important. But the more on-chain you can make it, if it's practical for you, the more transparent things become. And so that's also that's part of our build out, is that we wanted to do that and make it top of the line, but also as transparent as we can make it feasibly. So I mean, security is one of these things that we've seen a lot of problems across platforms, whether they're the smallest little DeFi protocol that got attacked, or it's some giant DeFi protocol that is corrupted from a social engineering attack, or from a some sort of smart contract issue. Even these giant bridges. So it's a challenging topic that the industry is still grappling with, and you got to do your best. You got to just be accountable and do your best.
Yeah. No, it's an excellent choice with Halborn. I've spoken with Stephen Walbral a few times on the podcast, and it's just
You're smart guys.
Excellent.
And girls.
Yeah, absolutely. Yeah, I would just, going forward with that, I was wondering if you could speak to any of the other technologies and networks that Bracket Labs leverages, like Ethereum, Arbitrum, the Graph, Alchemy. I'm sure there's many more. Yeah. Maybe if you wouldn't mind elaborating.
We started building on Arbitrum because Arbitrum, as for those who are not familiar with Arbitrum, if they're just kind of checking this out for the first time, is a layer 2 on Ethereum. So it helps scale Ethereum's throughput, and it borrows from Ethereum security. That helps us as a project be more performant and for a cheaper cost. If we had, because we're all on chain, we had tons of transactions, and that would cost an immense amount of gas in order to complete those transactions on Ethereum. So really not a smart move. And we've seen plenty of projects make those mistakes, from enterprise grade projects all the way to the tiniest DeFi thing. But from where we sit, we need to be on something that's fast and cheap. So Arbitrum is the first choice. However, we did come out of the Binance Labs incubator, and so we do have plans of launching on Binance Smart Chain eventually. But for now, we're on Arbitrum because Arbitrum has a strong user base that is familiar with derivatives and familiar with trying DeFi products, because it's really a sandbox, right, for people to try these types of new products. And they have about, Pelli, $1.7 or so billion in TVL. So not even that much, but enough of a user base to give it a go. But that's how we're starting the stack, with Arbitrum. But we're an EVM coded project, so we can work on any EVM chain with minimal effort some effort, but to relaunch on our smart contracts on those, like Polygon or Avalanche. So maybe you could talk about some of the other technology, like the Graph and stuff like that we're using, which is pretty interesting.
Yeah, for sure. So for us, we have to do indexing on both the price, and also we have to make sure, once a contract is matched peer-to-peer, that it's running for 2 days and that it auto settles, right? And so we have to query the blockchain. So the Graph has been a long-term infrastructure provider. We use their subgraphs. They've now actually gone from a hosted to a decentralized subgraph. So that's been great for us in terms of performance. Oracles are also another really important provider. We work with Chainlink on that. So the cool thing right now is when you're transacting on Arbitrum, it's obviously you pay gas and ETH, but we can use the oracles to actually track the price of, say, Bitcoin, right? Because Bitcoin is a different blockchain. Or, in the past, we've done it for Solana, or, for Cardano, or other types of chains, and something that in the future that we're looking into is smaller altcoins, because there's different coins like Pepe that have been really popular that have volatility, and so through oracles we're able to do that. which is exciting. As Mike said, on the on the security side, we've obviously done smart contract audits with Halborn. We also have used Open Zeppelin. Their Defender has been really good to just, make sure that we're sort of up to date with the latest security protocols, and then also with Gnosis Safe for our multi-sig. So those are some of the infrastructure providers that we currently use. And we are always sort of in the ecosystem, like learning about the latest and greatest tech providers, because we want to be kind of at the forefront of that.
That is so cool, man. I'm excited. I just wish I lived outside of the country right now.
Yeah, it's super hard right now, especially in California, New York. For those users. I mean, not even from a building, but from like just using anything, from I think you said California, where the staking is they've stopped doing that, or some of the companies have stopped providing it. It's pretty crazy, honestly.
Yeah, it's definitely, it was a surprise. I saw it coming, but I thought that'll never happen. But I guess you never know. Yeah, well, anyways, looking forward to the future. I was wondering if you could share what we might expect from Bracket Labs, any exciting developments, partnerships, projects on the horizon that you'd be willing to share with the listeners.
Absolutely. So we're currently in testnet right now. Of course, Pelli has mentioned we've had some beta products in the past, but really our main for like a year, this product called Passage, which will launch hopefully at the end of November, is this new volatility market where it distills a complex product into a simple stay in or break out of the range decision. So instead of taking a bias for price direction in one way or the other, you could take a bias for volatility. Is it going to be volatile or not? And that's a super simple, really fun product that we've distilled into or we've modified into an on-chain, like fully on-chain strategy where you could buy them and you could trade, you could sell them, and there's a limit order book. So you can place, if it's let's say the range that is recommended is 2%. Like that's the market range. But you're like, I think I'll take a stay in, but it has to be like 2.5. You could place that order and wait for someone to match on the other side, or for liquidity provider to come in and take the trade. So we've developed that technology to make this type of market work. In the future, like what's coming is we're going to keep iterating on that. And right now there are 2-day contracts. To keep it short and fun, right? So the capital turnover is high. People don't have to wait forever to see them, to come back and check on their position. But eventually we are thinking about a perpetual market where it's a perpetual volatility market. So it's using the same Passage model, but the ability to add more leverage with margin and a funding rate to keep open, your positions, et cetera, over time. We're going to come up with our own model for that. But a perpetual volatility market would be super cool. So it's something that basically takes from what we've learned from our experiments so far and would build on that. That's a future prospect. But yeah, we'll be launching on new chains. So Binance is coming up probably, but Arbitrum is our home base, but Binance will probably be something we're working on. And we can't talk about partnerships yet, but we're going to have partnerships lined up for a distribution of the product to users who, who want to white label the front end, use their own front end, similar to how Synthetics operates as like an engine for perps. We definitely want to build this model out enough to where we could be an engine for this type of volatility product, where other front ends can use us, other exchanges like DEXs can use us, or folks that have the need to have their base asset become a denominated market. So an example would be like, let's say Pancake or something like that. They had Cake as an asset. They want to pay in Cake and redeem, and get proceeds in Cake. You could create a Passage market for that. Just an example of how you could do it. Right now it's all in ETH, but those types of asset additions could change. I don't know if Pelli mentioned, but we also have the ability to add assets like staked assets. So you could actually pay and get proceeds in staked ETH, which would be beneficial for those who are earning yield but don't and may want to do something with it, as opposed to just hold it. Right now, there's hundreds of millions of dollars in staked assets, but only a very tiny fraction of that is ever traded. Which there are reasons for that, but there's a lot of folks who might want to make markets in that, and so we want to give that opportunity as well. So we're going to probably do that in the future. So that's what you can look forward to. Right now, testnet's live, so we have folks just testing it out.
Yeah, I mean, I think, immediate, if you want to sort of test it out, we actually have a trading competition running for the next 2 weeks. And so that's all on bracketx.fi. We have a tab for trading competition. So it's, you can get free test ETH and see if you can play around with the product, and that will lead, directly into mainnet at the end of the month. So
Yeah, paper trading is, I mean, with something new, you always want to try it out, right? Before you put any real money in anything. So it's available for folks that aren't restricted to use it. So we're excited about that.
Yeah, very cool. Well, just to kind of close here, I was wondering if you wouldn't mind sharing advice to anyone listening who is either interested in entering the DeFi space, whether investors or entrepreneurs, if you could share any lessons you've learned on your journey with Bracket Labs that you might be valuable for anyone listening.
from my side, I think a lot of people are a little bit scared to enter, DeFi. And my recommendation is right now, there are quite a lot of products on testnet. And if you're just trying to sort of learn about how, the mechanism of these protocols work, because a lot of them are quite complex, I would recommend, just going to testnet, getting some free tokens, testing out. Oh, this is how a DEX work. This is how a perps work. This is how a passage works. And then, using that as sort of the first entry guinea pig, and then using it to trade, real dollars or ETH or whatnot. So that's what I would recommend as kind of like training wheels for DeFi, and then going full on mainnet.
Yeah. From a more philosophical perspective, I think a lot of young folks, even young, I mean, I'm in my 30s, so I'm a similar boat to you, Ethan. I think Pelli is as well, right? So we're all in our 30s, right? We're all the same age that it's like, if it's interesting to us, it's going to be even more interesting to the young folks. And I think one of the advice pieces I would give, and I had this fear as a younger man myself, don't be afraid of picking something out that is maybe not socially popular today. I think having some courage in today's world is really important. You look out, you say, something's not working for me, or for my generation. Every generation has had that moment. A lot of people, my generation is, your generation has had it easy. No, every generation had their own cultural moment, right? In the 60s, we had the Cultural Revolution for hippies, and all that, and kind of the liberalization of society in way. And before that, I'm sure every generation had their moment, right? Their thing. And I think a lot of young people, I take this seriously, because a lot of young people that are my friends, like a lot of younger guys, are really disaffected. They're looking at where the market is and where the world is and say, I can't afford this. I can't do this. I'm working so hard. I don't feel like I'm getting a fair shake. And it's okay to feel that way, but it's also, you have to have the courage to say, what can I do to affect change positively for my kids? One of the things that I did, and I think Pelli did as well, is look at this and say, this is the future, potentially, of money, of exchange, of transparency, that solves a lot of the centralization issues that it caused, or centralizing issues that opacity that caused the financial crisis in 2008, right? That's why Bitcoin was invented, right? That's these issues, central bank issues, that also affect the economy and the global economy. And there is another way we could take this forward. And so having the courage to do that, and to say, I can make a difference, and I can get involved at any level here and experiment, like Pelli said, on stuff, or join a small startup, or even join a big company that maybe is looking into this space, and getting your feet wet, calling up folks, like being really helpful, calling up like on LinkedIn or something. If you see somebody that is doing what you want to do, or interested in an area that you are interested in, try to be helpful to them without having them ask you to do anything. They won't pay attention to you otherwise. Just be like, I'll do this for you. No questions asked. Right? I'll help you on this thing. What can I do to help you get something done? And then build a relationship with that person. And that's how you have to get into an area you want to be in as an entrepreneur, as a first job, that you can't expect to get things from those types of people, because you have to be the one that's bringing value. So that's a huge recommendation for people that are just getting into the job market, that want to try to affect change this way. And then for entrepreneurs, I mean, I don't know. I would say, like, again, just be courageous. Try to build things that you would use, and look for the future where there's an asymmetric upside. And it might not be obvious to everybody at the moment. As Peter Thiel said, a lot of the mistakes that early startups make are going after markets that are too big. And you can get lucky, right? But if you're in a small market where there's a lot fewer competitors and you succeed, there's a very good chance you will succeed if that ends up working out for you, timing wise and your business. And just being adaptable and not being afraid to adapt and pivot and do what you need to do to get to the end goal for what you think. But I can't speak much to anything else, but that's the advice I would give to anyone looking at this space from the outside, and that kind of understands where we're coming from and where the industry could help the world go. Don't be afraid of your peers who say, "Oh, that's stupid" or whatever. I mean, if you see the light and you kind of see where things are headed and it all seems a little silly, it's okay. That's how it starts, but it will get more mature. It will get more accepted. I mean, years ago, we would never have thought that Larry Fink would go on television and say Bitcoin is a flight to value, right? Or a flight to equality, rather. We would never have thought that in a million years. And so things are changing faster than you think on a 10-year time scale. So if you evolve, don't be afraid. And that's the only kind of advice I could give to someone looking at this industry from the outside that understands maybe some of the upside.
This is very well said, both of you. Where can people go who are able and would like to get involved?
So as far as us, our own platform is concerned, bracketx.fi is a great landing spot. It's our website, but we have a Twitter. It's a Bracket Labs. Look us up on Twitter. I think it's _bracket_labs. Pelli, I think that's the right handle, but you'll see us Bracket Labs.
Yeah, it's at bracket_labs_. We have a link tree, so it connects to all of our documentation, our Discord, our Medium. We have a lot of material out there, and we just encourage you to get involved in our community and be part of the journey. We're growing. We're a small team, but we're growing as well. So and we're excited to educate and help people along for the journey.
Yeah, it should be fun. It should be fun too. Get out there and try stuff in DeFi and on test nets, and follow us. And also, there are other really exciting people in this industry doing incredible things. So shop around on Twitter. It seems to be still the hub for blockchain related things and crypto related things ever since probably 2017 or so. So shop around and find some cool parties you might want to follow.
Absolutely. Yeah, very good. Michael Wasyl and Pelli Wang, thank you so much for your time. It's been an absolute pleasure. Wish you all the best.
Thank you, man. Appreciate it.
Thank you.